It has been a tough couple of weeks for Tesla investors, as many have sold their shares for fear of the stock price crashing further, while some others are still torn between selling their shares or leaving them, in hopes of better prices for Tesla stock in the future. According to Morgan Stanley, Musk's ongoing Twitter drama has been a drag on Tesla's stock price, and could expose the EV maker to further risks in the future. Hey guys, welcome back to Everything Tesla Stock. Tesla stock has suffered some major drops in the past few weeks. The stock price has been on a downward trend, rising only a few times in the previous weeks. While there are several catalysts that can cause the stock price to soar, there are also factors that pose a significant threat to not just Tesla stock but the car company itself. So without any further delay, here are 3 factors that may hinder the growth of Tesla stock in the future. But before we start, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Number 1. Possible lockdown in China. There have been swelling protests against several and severe pandemic restrictions in China, which represents the world's second largest economy. And these protests are causing new uncertainty and instability in the global economy, where nations are already struggling to manage the fallout from a war in Ukraine, energy crisis, and painful inflation. This comes as China reported a third straight day of more than 1,000 cases of the COVID virus. As of October 24th, some 28 cities across the country were implementing some degree of lockdown measures, with around 207 million people affected in regions responsible for almost a quarter of China's GDP. Across the country, around 200 lockdowns have been implemented in recent days, the majority of this affecting communities that have been marked as high or medium risk. For years, China has served as the world's factory and a vital engine of global growth, and so any major trouble there cannot help but ripple elsewhere. Analysts have warned that more unrest could further slow down production in the country, and it may encourage companies in the US and Europe to disengage from China and more quickly diversify their supply chains. Following the previous occurrence of the pandemic, the Shanghai lockdown, which coincided with shutdowns in other cities, weighed on China's broader auto market, dragging auto sales down by over a third compared to a year earlier, and Tesla was majorly hit by this lockdown. However, while the automaker's Chinese rivals were showing signs of a broader market downturn too, their drops in deliveries and sales growth were milder than Tesla's 18% plunge. This is likely because of these companies and how they've got their production sites in cities that weren't completely shuttered by the pandemic. NIO, which is headquartered in Shanghai, has its main manufacturing site in Anhui province on China's east coast, and so its manufacturing hubs outside of Shanghai might have saved the company from the worst effects of the lockdown. In 2019, Tesla opened its Gigafactory in Shanghai and delivered its first China-made cars to local customers, just before the onset of the pandemic in January 2020. The company, however, only began delivering a second China model locally in 2021. Tesla relies heavily on its Chinese market, and the automaker reported its first quarterly sales to decline in 2 decades. In June, revealing deliveries dropping by 18% in the second quarter of the year compared to the first 3 months. According to Tesla, the harsh, month-long even, restrictions in Shanghai that halted production at its local Gigafactory was a major reason for the slowdown, as it was forced to close down its facility in this location, a move which significantly affected its production and delivery levels. One of the only EV makers in China to deliver quarterly growth in the most recent period is Tesla's biggest rival in China, BYD, which reported total sales of 355,021 units in the second quarter, surging 21% from 291,378 in the first quarter. However, the reason for this is not far-fetched. Tesla and BYD aren't competing in the same market, and while Tesla only sells pure play electric passenger vehicles, BYD sells hybrid models as well as commercial vehicles like buses. Tesla has continued to ramp up production in China, and the car company has sold more than 1 million cars in China and helped propel China to become the world's largest EV market. About 66% of worldwide EV sales are in China. As of 2021, Tesla sales in China were nearly half the size of what the automaker sells in the United States. The car company reported sales of $3.11 billion in China in the third quarter, which is about 48.5% of the $6.41 billion sales in the United States during that time. Tesla also recently delivered 83,135 China-made EVs in September, smashing its monthly record. This number was an 8% increase from deliveries in August, and it set a world record for Tesla's Shanghai factory since production began in December 2019. China is the world's largest auto market and a major destination for global brands, which is why Tesla continues to invest in production in this market. And so with another lockdown on the way, Tesla may well be on the verge of losing production, which will consequently affect margins in the long run. Number 2. Risk of Musk selling more Tesla shares. One big threat to Tesla stock at the moment is the possibility of Musk selling more shares. The Tesla CEO sold almost $22 billion worth of Tesla shares in 2021, a year when the stock jumped over 50%. Likewise, this year, Musk sold over $8 billion worth of stock in April and roughly $7 billion worth in August. Earlier this year, when asked about the possibility of selling more Tesla shares, Musk told fans that he was done with selling Tesla shares to fund his Twitter acquisition deal. He stated in a tweet that he had sold the shares to raise funds in case Twitter forces this deal to close and some equity partners don't come through, in which case it is important to avoid an emergency sale of Tesla stock. But this was done when Musk was still battling the social media company in court, trying to get out of the deal. The Tesla CEO finally acquired Twitter and again sold more Tesla shares to fund his Twitter project. According to US regulatory filings, Musk sold $3.95 billion worth of Tesla shares, days after he bought Twitter for $44 billion. The now Twitter CEO sold 19.5 million shares of Tesla, according to data from the Securities and Exchange Commission. Tesla has lost nearly half of its market value ever since Musk's bid for Twitter in April, and several analysts have not held back on voicing their displeasure concerning the deal, Tesla shares, and there is no guarantee that he's not selling them again. Number 3. Lingering macroeconomic conditions. Tesla has navigated supply chain issues better than most of its rivals, and several analysts expect it to post strong growth in the coming years as it expands output. The carmaker shrugged off the economic upheaval caused by the pandemic, whilst reporting incredible quarterly profits. In July, the company's CEO, Musk, said that Tesla did not have a problem with customer demand, but simply a problem making and shipping all the Model Ys and 3s that consumers were ready to buy. However, while Tesla does seem to be cushioning the effects of the harsh market conditions quite well, the narratives might be changing, as there are indicators that the car company is being forced to respond to a tougher market. Analysts are starting to see early signs of caution for the world's most valuable car company, especially for its increasingly premium pricing, at a time when the global economy is slowing and expectations for global auto sales are being dialed back. The FED is also set to keep increasing interest rates in response to increasing inflation. The Federal Reserve had previously cut interest rates amid the pandemic, but is now staging the most aggressive race to raise borrowing costs in 4 decades. The US Central Bank recently raised interest rates by 3/4 of a point for the 4th time this year, officially bringing the benchmark interest rates to a target range of 3.75 to 4%, the highest since early 2008. The FED said it will likely continue with the interest rate hikes until there are signs of calming inflation. However, although another hike is almost certain, there is a possibility that this time the FED will be opting for a 0.5 percentage point, or a 50 basis point move. According to the Federal Reserve Governor, Christopher Waller, he is open to reducing the level of interest rate hikes soon, so long as the economic data cooperates. While it is good to focus on Tesla's fundamentals as a company, when making choices as an investor, it's always best to evaluate the potential threats of a company's growth in order to better be prepared for what may come. Do you think these factors can in any way affect Tesla's stock valuation? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.